What's up, guys? Welcome to episode 1 of the beginner series, and this is probably going to be my first YouTube video. Probably, still don't know yet. But the point of the beginner series is to pretty much take everything stock market related, going from A to Z, take someone who knows very little or who knows absolutely nothing and teach them and show them what they need to do to the point where they can buy their own stock, sell, invest, trade if they want to, day trade, swing trade. We're going to talk about all of that today, what that is. But that's my goal with this series. It's going to be several videos, but I'm going to give you all of the information that I know, all of the courses I've taken, all of the videos I've watched, all of the live trading that I've done. I'm going to put it all into this whole video series, and yeah, I'm pretty much going to put it all out there. So in this video, I'm going to be covering 3 things: investing, swing trading, day trading. The 3 methods that you can use to make money in the stock market. I'm also going to be covering what it means to go long, being a bull, what it means to go short, being bearish. We're going to start with simple stuff, okay? I know some people do have some experience, some people don't know anything at all. So this is pretty much going to be going from the basics to the most complex stuff as the videos progress. So with that being said, let's jump into investing. So the best way to explain investing is pretty much when you're investing into a company or into the market, you're buying something and you're holding it long term. When I mean long term, I don't mean a few days, a few hours. Long term means several years. I actually have a chart here of the SPY, which is a SPY. The SPY is an ETF that tracks the S&P 500, which the S&P 500 is the top 500 companies in the US. So one of the easiest ways to invest in the stock market is to actually invest into the S&P 500. Because when you're doing that, you're not investing into one company, you're technically investing into 500 different companies, all put into one ETF. So let me pull up this chart here. So this chart represents the S&P 500. And as you can see, each little tick here, each little candle that you see represents one day, okay? So if you're someone who invests long term, you're someone who's constantly putting money into the market. And as you can see, the market is constantly going up. Every year that passes, you can see the dates on here, 2015, 2016, 2017. The market is constantly going up. It does have times where it pulls back, but this is where investors, they put more money in. Because overall, in the long term, if we go back to the market is always, as you can see, always going up. Even this is what, during the 2009 recession time? During the time that the market fell. But still, recovered, stock market going up. So when it comes to investing, I look for certain types of charts. And I'll show you guys here, for example. Google is actually a good example here. Google is a stock that's constantly innovating, constantly going up. Visa, same thing. Credit cards payments aren't going anywhere. Debit cards aren't going anywhere. Visa's constantly, this is a great stock. What's another good one? Shopify. Shopify's been blowing up. E-commerce is huge. Online selling isn't going anywhere. If anything, it's going to get bigger. So Shopify, that's another good one. Apple, great stock. You want stocks that are constantly going up. When you're investing, you want to hold for 20, 30 years, and you want to invest in companies that you know are going to be innovating, constantly producing new products, new technologies, things like that. That's how I see investing. Now let's get into swing trading. Swing trading is basically buying and holding something and holding it for a few days to a few weeks, sometimes a few months. A great example of a swing trade would be Tesla. Okay, so let me pull up, this is a Tesla chart that I have here. And Tesla's a stock that I've done swing trades on in the past. There was a point in time where Tesla, as you can see, it was literally bouncing off of this area. It was literally just trading in this channel. So I know that when the stock would bounce at this bottom line here, eventually it would go back up here. So a swing trade would be buying on this day, holding it for a few days, sometimes, like I said, a few weeks, and selling it when you feel like, this is enough profit, this is where I want to take profits. Facebook is actually another good example. Facebook, when they had their whole crash, back when the whole security leakage of information was going on, Facebook dropped a lot. And Facebook it's overall a really good company. As you can see, they've constantly been going up, but up until this area where the whole scandal of information being leaked happened, the stock was dropped a lot. I actually got in probably around here, and it ended up dumping a lot more than I expected. So this for me was a swing trade that lasted for several months. When the stock finally recovered to this area, I was finally able to recover for a very small profit, but for the amount of time that I held, I didn't find it to be really profitable because it took forever to recover. But that would be a good example of a swing trade. Buying when a stock kind of like drops a lot, but you know it's going to recover eventually. Hey guys, so just shooting this quick clip for the people that came over from Instagram and want to get access to my close friends group. All you need to do is drop a comment with your Instagram username so I can get you added. Like and subscribe to the video channel. And yeah, that's all you got to do. Okay, and lastly, we're going to get into day trading. So when it comes to day trading, this is the most riskiest out of the three. Investing is the least riskiest because you're holding for long periods of time. It's money that you know is gonna recover eventually. Swing trading, medium type of risk. You have the potential to lose a lot, but you also have the potential to make a lot, and your risk can be very minimal when it comes to swing trading. Now, day trading is the most volatile and the most risky out of all three. When it comes to day trading, you're pretty much buying and selling the stock the same day. You're buying it and you're selling it within a few minutes, at most a few hours. But a day trade, like I said, typically happens that same day. Whenever you're day trading stocks, depending on what field of what area of stocks you like to trade, either penny stocks or you like to trade the bigger stocks. Typically, people like the penny stocks because they're cheaper, and if you have little money to start with, then you can build your account up pretty quickly if you know what you're doing. So day trading charts typically look like this. They look like the complete opposite of investing charts. So this is something you would day trade. Actually, let me pull up 30 days, 1 minute. This is a perfect example of a day trading chart. As you can see on this day, if you go back, the stock is just moving, not even that much. It's just a little bit. We went from 140 to 170, 30 cents, no big deal. When you're day trading, you're typically trading this type of movement. Stocks that go from $3 to $5 in a day, $2 moves. Things that are moving quickly, constantly going up, dropping. This is another great example of a day trade. I think this was last Friday, CODX, it was a coronavirus stock. In the middle of the day, some news came out. The stock ended up spiking from $3 all the way to like $4 in a matter of minutes. Quick moves. But if you look at the next day, if you look at the chart, if you're somebody who bought it up here and you held it for the next day, look what happened the next day. The stock dumped. It went right back to where it started. So when you're day trading, the risk is there. If you're not buying and selling quickly, you're gonna get caught in the downtrend and you're gonna lose a lot of money. Some examples of some day trading charts are things like CEI. These are things. If you look at this stock, if you see the candles, there's nothing going on here because this is a chart where people don't even invest. This is just a stock where people day trade it. You see, quick boom, it went up, went down, done for the day. Quick moves. Go back down, go back, not much action, not much action. Same thing here. Quick move, sell it, dumps, bam, you're done. Now let me talk about what it means to go long and to go short. And these are terms that you're going to hear a lot, whether you're investing or day trading or swing trading. It doesn't matter if you're investing or trading. You need to understand what it means to be long and to be short. When someone says they're bullish or they're long on a stock, that means they are holding long. They're expecting the stock to go up. Someone who goes long on a stock is pretty much riding the uptrend. They're going long. They're going up. Now, when someone says they're bearish on a stock or they're short, it means they're expecting the stock to crash. So in the stock market, we have two people. We have buyers, we have sellers. Whenever someone's losing money in the market, someone else is making money. Whenever someone's making money, someone's losing money, vice versa, right? So when longs are playing a stock, they want it to go up. When shorts are playing a stock, they want a stock to go down. They make money off of stocks dropping, okay? So you need to understand that when you're trading, you're going against people who want the stock to continue to go up, and you're trading against people who want the stock to go down. So I hope everything I covered made sense. You understand what investing is. You understand what swing trading, what day trading is. When you first get started in the market, you need to determine what you want to do. Do you want to invest? Do you just want to trade stocks, buy them and hold them for a few weeks? Do you want to day trade stocks, or are you going to sit in front of your computer for a few hours and day trade things? You need to figure out what you're going to do with your money. You just don't want to throw your money into something and expect it to go up. You need to understand the types of ways to make money in the market. And hopefully you guys also understand going long, going short, understanding what it means to be a bull, what it means to be a bear. And I'm going to wrap up the video here, guys. If you have any questions at all, leave them in the comments below. I'll respond to every single comment. And if you feel like the information is pretty useful, subscribe. I'm going to keep on posting these videos. I'm going to post them. I think it's either going to be every Monday or every Wednesday. I'm still kind of trying to figure that out. But I'm going to be posting these videos every week. It's going to be a new video. And by the end of the series, like I said, my goal is take someone who knows absolutely nothing, and they'll be able to buy, sell their first stock, and pretty much understand or hold up a conversation with somebody regarding the market. So with that being said, thank you guys for watching, and I'll see you in the next video.